Hello and welcome. You're watching Closing Trades with me, Mansi Dave, and my colleague Shrishti Sharma. And at present, it's a choppy trading session for the markets where the benchmarks are at least trying to hold on to those levels 24,850 and above on Nifty 24,882 to be precise, and Bank Nifty still quite volatile, absolutely flat at 56,203 level in red pattern. However, the broader markets, mid cap and small cap, have tanked down in trade. Most sector-wise, if you see, they have lacked the momentum. But at present, if you see, a little bit of action is still seen in stock-specific approaches on the back of earnings as well as news flows which are flowing in into the markets. But it is a volatile session, and not to forget, tomorrow is the monthly expiry session. So brace up for more volatility. We have with our market experts to help us navigate through the markets. We have Sharan Delane to help us through the technicals of the indices and his stock-specific approaches. And for the long-term perspective of the market, we have market expert Sunil Subramaniam joining with us. Gentlemen, good afternoon. Thank you so much for giving your time to ET Now. Sharan, we'll start with you and quickly need your view and strategy on the indices. It's 24,880 and above on Nifty, but Bank Nifty is still quite volatile.
Good afternoon, everyone. So Nifty is also very quiet, a very lackluster day, very boring, sideways to say, but still something is better than nothing. So Nifty is about to close around, I think, 24,900 odd levels, and I think if it continues above that level, you can see 25,000 levels tomorrow. And looking at Bank Nifty, very flat, nothing at it, though it did test 56,000 levels on the downside, but quickly recovered from that level also. Again, the levels remain the same, 56,500 a resistance for the Bank Nifty and 56,000 immediate support. If at all it trades anyway on any side, I think we can see some movement coming in tomorrow.
All right, so that's about Nifty as well as Bank Nifty. Very sideways moves as what we are seeing right now. But there are a lot of stocks that are going to be in focus on the back of the earnings. And in the latest, it's M&M that has come out with an announcement indeed, wherein tomorrow is when we were expecting the numbers to trickle in, but an announcement has come just now, before a few minutes rather, where the company has said that not tomorrow, but even today is the company when they will be declaring the results. So let's quickly tell you what is the street really penciling in when it comes to M&M. And this time around, what we see is that it's expected to be a good set once again for M&M, specifically for their tractor division. Look at the jump in the volumes. It's a 52% uptick on a sequential basis, while for the automotive division it's been a 10% growth on volumes. But this time, on the back of the higher contribution because of their EVs, the auto EBIT margins is expected to decline a bit, but shouldn't be much of a concern. Like on the margin front, 8.8% is what we are expecting. When it comes to the tractor division, that's expected to be healthy at 18.9%. But yes, of course, on some of the upcoming launches that the company is planning and how they see the demand shaping up for both of their segments is something that we will be watching out for. So indeed, M&M will be in focus as of now. On the back of this announcement, indeed, we are seeing a bit of a surge coming in on this particular counter. But just wanted to get your take, Sharan, quickly, if you can help us with a chart check on M&M. A bit of a surge, what do you make out of it?
So Srishti, I think the stock has been consolidating around 3,100 to 3,300 levels for quite a long time. And I think post today's results, I think you can see some kind of positive action. But looking at the chart, it is almost near its all-time high levels of 3,300. And if at all the results are above expectations or even better, or the commentary that comes in can be good, you can see a sharp uptick to 3,300 levels. And if you get a breakout about 3,300, you can also see levels of 3,400 coming. On the charts, trading above all its moving averages, quite strong. Also seen quite a bit of accumulation in the last 6 to 9 months. So obviously we'll wait and see how the results are. But looking at the chart, I think you can see a good uptick till 3,300.
Absolutely. An uptick till 3,300 is visible, at least when we see the chart patterns of Mahindra and Mahindra. We'll keep an eye on that. And yes, a news flow and an impact coming in on the back of the news announcement which we see. But let's also take a fundamental view of the market, and for that we have Sunil Subramaniam joining with us. Sunil, good afternoon. Thank you so much for giving your time to ET Now. And quite a choppy market at present, and this is the time where we not see the short-term perspective of the market, because now the direction is missing and the triggers are missing. Not that we don't have any triggers, it's the earnings season. We are in the middle of the earnings season. It's a mixed bag. The global front, tariff scenarios, all of it is quite volatile, contingent and uncertain. Now, how to find a proper entry opportunity in the market is a big question at present. What's your take on the texture of the market at present? Because there's a lot of sign of fatigue and mild growth slowdown, which we clearly see at present in the market.
Thanks. I think you did a good summary, Mansi, but let me add a little bit of flavor to it. So where I see is that, see, the market, if you look at the 3-month returns of the indices and the 1-month returns of the indices, it'll tell you the whole picture. Because in 3 months, if I recollect, I think the Nifty was probably just 2.5% up. And you saw the mid cap index at about 7%, small cap at about 10%, right? But you see the 1 month, it's a different story. You have the Nifty and the small cap and the mid cap, all under pressure. So what this is telling you is then you got to look at the flows, which is what has decided this. So what happened is that April, May, June saw a strong buying by both FIIs and DIIs. Of course, DIIs was a huge outnumbering the FIIs. So that's why if you see the mid and small cap indices largely outperformed the large cap index in the 3-month period because of the strong domestic buying, right? But I think what's happened, and this started with the earnings season rolling out last quarter, which is for the Jan, February, March quarter, from April middle onwards as the earnings came out, DII stepped in and domestic mutual funds especially stepped in, and as they got clarity on earnings, they did buying of good mid caps and good small caps, and they looked at them as the growth drivers. Now, bear in mind that there's a huge valuation difference between mid caps and the large cap. Large cap is around 22, 23 P. Mid caps and small caps are at 32, 33 P. So despite the higher valuations, domestic fund managers bought those stocks as the last earnings season flowed through, right? Now, come to this, starting from July, what has happened is 3 things have happened. So first is FIS has suddenly turned. I think they're close to probably 50,000 crores sold just in the month of July, which means almost all the money they brought from April to June, they've sold in this month. So dramatic change in outlook on India from the FII. That's the first factor. Second is DIS, if you see, right, while they have bought in about 50,000 crores this month, right, which means they are actually rupee for rupee matched the FIS selling with their buying. Certain key things step in here, right? This 50,000 crore buying is less than the 65,000 crores which you saw in the previous 2 months. So clearly DII buying has also come down. Why? Because I think domestic mutual funds who had built up their cash balance to about 7.5% of the total AUM used all the cash up April, May, June, and by June end, their cash balance was back to a normative 5 quarter, right? So this month, only the fresh flows of SIP, whatever has come, and a little bit of surplus cash they've been able to deploy. So why I'm given such a long explanation is that now when you look at it, why did the FIs change their mind? FIs changed their mind because of 3 key reasons, right? One is US continues to be attractive because the rate cut doesn't seem to be on the horizon. So the interest rates are high there. But US growth is also quite decent. There has been thing. Inflation is a concern on which Fed will opine today, but there doesn't seem to be a rate cut in the immediate future. So US with higher yields from a debt side is an attractive market. Second, China. China, as you saw the IMF data today, they've upped the growth rate for the current year to 4.8%. But China has half the valuations of India at 11 PE. So clearly a lot of allocation has gone to China because of their improvement. The fact that they have come close to a trade deal with US, discussions are on, but at least their tempers are down. But India, unfortunately the third thing affecting us is that it's unlikely that a BTA is going to be signed before August 1st. We have only 2 days left. And Mr. Trump indicating 20 to 25, which was yesterday. But right from the beginning of the month, you can see that there was no news flow coming that a deal is close. India's trade delegation came back, but there was no development because think India is taking a very strong stance on certain non-negotiables like agri, dairy, genetical modified goods, and the like. So it looks like we are not going to yield on that, and so a deal is going to be not that easy to conclude. Now, a US Trade Commission is going to come in the middle of August. So, which means that automatically the
Sure.
26% tariff, which was put on a pause, will kill. So, this 20 to 25 that Trump is saying is nothing new. His 26% was
True.
anyway going to come on track. So,
True.
FIs they mind because and China was looking attractive,
Yeah.
US was looking attractive, and India with the BTA slipping out of our hands. Now it looks like only in
Absolutely.
fall. So just
Yes.
to finish off my point, so this selling by the FIS, while the DIs have also put in 50,000 crores, the fact is that they stocked up on mid and small caps. And you look at the earnings, mid and small caps have beaten large caps in terms of the earnings growth. They are a double digit with single digit for large caps,
Yeah.
but they don't justify the 32, 33 PE. So fund managers are booking profits at mid cap and small cap to buy some of the large caps that's there. And where are they going buying? Where there's a sharp correction. IT index year to date is 23% underperforming the
Yes.
Nifty. So there's a
Yeah.
huge correction. So despite all the negative news around IT earnings, it's like it's coming into a value zone, so there's buying there. So
Yes,
essentially,
indeed.
what we are seeing.
So it seems like it, since the fact that we are also getting to see some of the earnings that have trickled in, case in point being KPIT Tech. But yes, what all you have been saying is indeed making sense. That seems like there's not much of a deviation, and something of this sort is already in the price. But moving on to the next story then, and on to an ET Now exclusive, wherein the Agriculture Ministry has rather approached the Finance Ministry in a move to rationalize GST for agro-pesticides and farm equipment. My colleague Prakash is here with all the exclusive details. Take it away, Prakash.
Yeah, it's a positive development for the agriculture sector as GST on various farm products likely to be rationalized in order to bring down the overall input cost, a very significant development coming in. In fact, the process has been initiated. Sources are indicating that the Agriculture Ministry has approached the Finance Ministry on this issue once again. A fresh proposal has been submitted after a wider consultation with the industry. In fact, sources suggest that the GST on pesticides likely to be rationalized in line with fertilizer products that could be brought under lower GST slab from existing 18%. In addition to that, the definition of pesticides may be amended as well based on their uses. A very crucial development coming on to other farm-related products, essentially equipments. Sources are indicating that the GST on equipment such as tractors, pumps, other irrigation items will be rationalized as well in order to bring down overall input costs to support farmers. A very crucial development coming in. In fact, the GOM on rationalization is considering the proposal. However, the final report is yet to be submitted to the GST Council. And of course, the GST Council will take the final call after wider discussion.
Okay, so that's an ET Now exclusive. GST on agri products likely to be rationalized soon. Prakash, thank you for all of those updates. We'll keep an eye on that and help you with all the updates that come our way. Moving ahead, we also have another technical expert joining our panel. We have Nagaraj Shetty, technical and derivative research analyst, HDFC Securities, joining with us. Nagaraj, good afternoon. Thank you so much for giving your time to ET Now. As we see, there's a lot of stock-specific action on the back of results, but at the same time, the action on the indices is still missing. It's a quite range-bound market, at least Nifty trying to hold those gains of 24,850 and above. But what's your view on the stock-specific front? What are the trading ideas from your end?
Hi, good afternoon, Nancy. Nifty has been in a range-bound action, but what we can also in the last couple of sections is a little bit of turnaround from the lower levels. What we have seen over the last few weeks is a continuous downtrend from the higher levels. It was merely a gradual downtrend from the lower tops and bottoms. But yesterday's bullish engulfing pattern and today's consolidation and just moving above from the consolidation is indicating there is a possibility of some more upside in the near term. Once it moves above 24,900 levels, we could see Nifty reaching towards the next hurdle of around 25,250, 300 in the next few sessions. So on the stock fronts, we have seen some healthcare pharma stocks looking very well in today's sessions. I have two stocks from that segment. First one is Sun Pharma. Chartically, Sun Pharma has been in a larger consolidation phase, where technically we can say some kind of accumulation was going on. Currently placed at the higher end of that consolidation, around the 1730, 35 levels. So one can look to buy at this point of time, currently trading around 1733, and the upside target would be around 1830. One can place a stop loss at 1680. Second one is PI Industries. PI Industries was moving in a larger range bound in the last 2 weeks. It was after a sharp upside momentum for the past few months. The trend remains intact. The recent range bound action seems to have broken above the recent hurdle of around 4200, currently trading higher. So now trading around 4316 levels. One can look to buy at this point of time, and the upside target will be around 4570, and one can place a stop loss at 4150.
All right, so those are the calls coming in from Nagesh at this point in time. But moving on, and some of the other news flow that the globe will be tracking is, of course, the FOMC meet outcome, because the Wall Street may be eyeing that actively, and so will be the case for the other global markets as well. And this time around, the investors are majorly expecting the rates to remain unchanged. However, the Trump's push for further rate cuts, that will materialize or not, that remains to be a question. Ankur is here to tell us what to expect. Ankur.
Yes, all eyes on US Federal Reserve meeting outcome, as expectation is that there will be unchanged rates this time at 4.25% to 4.5%, and that has been continuing since December last year. Now Fed is likely to revise the 2025 GDP and inflation projections, but it may remain cautious amid global uncertainties and rising tariffs. Even the inflation pressure is persisting in United States. Also, the clues on internal dissent will be there, because you remember last time member did dissent about cutting the rates in the last policy itself. So it will be interesting to see the dot plot how they are projecting rate cuts later this year, whether it is 1 or 2. That will be interesting to watch out for. Now, what happened in the last policy? In the last policy, the rates were kept unchanged, and the real GDP growth and unemployment rate was tinkered last time. And in fact, if you talk about last few meetings, at least 4 times after December 18, there has not been any change in the rates, but there has been divided opinion if you talk about how many cuts should be there later this year. US President Donald Trump has been quite vocal about US Federal Reserve needed to cut rates, but all eyes will be on Powell, whether or not he bows on that pressure. But interesting to see the dot plot which will be presented in the press conference.
Absolutely, Ankur. All eyes on FOMC meet interest rate decisions and the commentary coming from Fed Chair Jerome Powell. Moving ahead, ET now believes in the importance of investment, and on the same lines, the beginning of the month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. Well, on that note, we slip into a short break, but we'll be right back. You stay there.
Welcome back to Closing Trade right here on ET Now, where we are tracking the markets, and it's just last half an hour of the trade that is indeed left for the markets to shut shop. But tomorrow is going to be a very interesting one. Not just we will have the outcome from FOMC, a lot of earnings, and along with that it's going to be the monthly expiry as well. So let's watch out for all the action there. But Sunil, the top gainer for today remains to be L&T. Yes, of course, not just the earnings, even this got a thumbs up from the brokerages as well. What's your own sense on L&T, given the fact that the stock as a whole has underperformed the Nifty on a 1-year basis? And if we will see the outlook, or rather the growth outlook, that remains to be quite good, specifically with respect to the private capex that the company has highlighted.
Yes, well, I think that, well, I can't talk specifically about the company. I think the guidance that they've given in terms of private capex, I think augurs well for the entire capital goods space. So it's not just that, because as you know, it's a large company and it will not execute all on its own. It will in turn subcontract it to a large number of mid and small cap capital good suppliers. So I think it augurs well, and private capital has been the one lagging number for Indian economic growth, which has not been picking up. So I think it's good signs, early signs of that revival means that overall it could be very good for the overall mid and small caps especially, and for the infra cycle and for public sector banks. So I think this was a very encouraging set of numbers that came through. And as you mentioned, more than the numbers, it was the guidance that was the thing. And the reason why so far, because of the private capex not growing, was where companies in this infra space were getting hurt because analysts were downplaying them in terms of saying when will private caps pick up. But with the green shoots not coming now, seeming to come through at the ground level, I think it's augurs well for the future for the capital goods space. And that's the takeaway I would take from the earnings results today.
Absolutely. Now, on the ticker in the lower bottom, as you see, Power Grid results and the margins figure is 8,000. Margins figure is 81.8% versus our estimate of 86%. 82% is what the margin figure has come up. Apart from that, the revenue front as well as the profit front, we see around a year-on-year 7% upsurge in the profit front. The number is 3,653 crore versus 3,412 crore. And at the same time, the revenues have also seen an uptick of around 1.5% at 9,928 crore. The stock is reacting at present, and as we see at 289 to 90 levels. Power Grid will take a technical check on that as well. But we have Siddharth Khemka, Head of Retail Research, Motilal Services, joining with us. Siddharth, will come back to you. Just before we let you go, Sunil sir, one last piece of advice for the market participants. At present, we see a flux-like situation. Let us know what should be the strategy at present, because we have a lot of triggers. The earnings season is up and running. At the same time, the interest rate decisions, RBI credit policy and monthly expiry for tomorrow. Also, on a shorter term basis, what is your view? How should the market participants behave?
So I think that first of all, I would recommend to them to take a slightly medium-term approach, not to take a very short-term approach, because the congestion in the market is likely to continue till there's clarity on the BTA front, I think. But that being said, right, I think because of the lack of clarity on BTA and the FIS selling, I think what you need to start accumulating, and I would say have a consistent buy on dips approach, is on sectors where the FIIs will buy when they come back. So then what stands out is if you look at the large cap index allocation, BFSI is about 30%, IT is about 10%, and FMCG is about 6-7%. So I think these are the sectors where I would say that when FII money comes back into India, and it's only a matter of time, because like I said, there were specific reasons why they went out of India this month. But if there's any good news on the BTA or saying that something will happen, they will come back. And I think that if you keep your focus around those, because those are the things which have underperformed because of lack of FII buying. So I would say pack a contrarian approach. Buy on dips. It's not as if you buy today and immediately go up tomorrow. There could be a series of small corrections happening, but keep sticking with a medium-term approach and keep your eyes open on the FII space, what they are likely to come back and buy. The second is taking a read from the L&T results today. Clearly now the capital goods sector looks like the future will be good. So I think to that extent, from a medium-term perspective, revival of private capex augurs very well for medium-term growth. I encourage everybody now to look at the infra and capital goods space, but again, buy in a staggered way, not to put all your money at one time. So I think those two, if you keep in the back of your mind, along with the capital goods, I would expect public sector banks to lead the financing of the capital goods companies. So I think the loan growth for the public sector banks on the corporate side would be much better than the private sector banks because they are more ingrained in that business for many years. So I think these are the top things that I would keep in mind at this point of time in terms of taking a future approach.
All right, so that's the strategy that Sunil. Thank you so much for taking the time out and speaking with us. But for this, let's also get you some of the tradable ideas from both of our experts, and let's understand which are the stocks that they are tracking at this point in time. And Sharan, you go first. Tell us which are your stock calls for today.
So for today, Shrishti, I'm liking RBL Bank. after having a good breakout, it was consolidating, and today it has seen again some positive momentum. So I think this momentum will continue into trade into tomorrow. So you can do a BTST trade in RBL Bank. You can buy at current levels 262. Your first target should be around 267 and 272. Your stop loss should be around 257. Secondly, at one point of time, you can see M&M almost near all-time high. But at the same point of time, Bajaj Auto charts are looking quite weak, and I think it is about to break down. So you can actually short Bajaj Auto July futures. It's a STBT trade just for 1 day. You can short around current levels with a stop loss of around 8120. Your first target should be around 7960. It's a 1:1 risk reward kind of trade.
All right, so that's a take coming in for Bajaj Auto. At the same time, Nagraj, your quick view on Power Grid, and of course, if you have any BTST, STBT trade at this point.
Yes, Power Grid, after the result, we have seen some cut from the higher levels. Chartically, this stock has been in a range bound action. We have seen recently some upside bounces failed to sustain the highs of 200-day EMA and came down. The range bound movement is likely to continue for some more period. And I'm expecting this stock to slide down to the immediate supports of around 280 levels in the short term.
All right, that's the take coming in on Power Grid. Yes, a sharp 2% decline is what we are seeing on this particular counter. But with this, let me also welcome Siddharth Khemka, Head of Retail Research at Motilal Oswal, on the show right now. Hi Siddharth, afternoon. Good to be speaking with you. And Siddharth, firstly, earnings season is in full swing. And yes, of course, every day we get to see the reports from your house as well. Help us understand that in which sector are you guys building the most conviction at this point in time?
Yeah, good afternoon, Srishti. Glad to be on the show. If you look at, we are midway in terms of the overall earnings season, and Q1 really has been a mixed bag, both in terms of the delivery from several sectors, and also if you look at within sectors, there is a vast divergence in terms of delivery. So I think more or less, if you see results have been in line, be it from the heavyweights banking sector, we saw good numbers from ICICI, HDFC, but weak numbers from the likes of Axis, IndusInd, Kotak. At the same time, if you look at IT, I think the large cap IT is more or less delivered in line, but the mid cap IT is a little bit disappointed, and with the high valuation, we saw the beating. One sector which clearly stands out in terms of earnings growth is cement. Across the board, we saw very strong numbers. Volume growth was there, realization improved marginally on a sequential basis, and costs were under control. That led to a sharp improvement in overall profitability. So we are anywhere between 20 to 30% earnings growth across cement sector. So I think that is one sector where we are building a positive view, be it. So our preferred picks within the cement pack is Ultratech in the large cap space and JK Cement in the mid cap space.
Okay, so JK Cement, Ultratech Cement, these are a few spaces and particularly scripts which Siddharth and the team is eyeing. Siddharth, hi, good afternoon. Mansi this side. Do you see any momentum building in the insurance space at present? Because there are a lot of data, and at the same time we also have news flows and result-backed action coming in. What's your view on the insurance space altogether? And do you see sector-specific tailwinds emerging in this sector at present?
I think yes, if you look at the overall insurance space, what we are seeing is that again, some of the leaders in the space are delivering decent growth, both in terms of the new business issued plus the VNB margins improving on back of changing in the product mix. So I think companies like HDFC Life, SBI Life, they are at the forefront in terms of earnings recovery and growth that is coming out in the current quarter as well as in the upcoming quarter. So I think clearly, yes, some of the stocks have moved up, but any fall or decline due to the market effect can be a good opportunity to accumulate stocks of the likes of HDFC Life, SBI Life, which are our preferred picks within the life insurance space. General insurance and health insurance, I think it's a mixed bag. There is definitely some pressure that we are seeing in terms of margin, some regulatory issues, plus the claim ratios being a little bit on the higher side. So that is impacting the provisions as well as the profitability. So overall, I think Life insurance could continue to do better, and what we like is HDFC Life. We have a price of 900 from a 1 year perspective, and SBI Life Insurance is the other one that we like. We have a target price of 2140 again from a 1 year perspective.
All right, so that's the take coming in on the insurance counters, but all eyes will be on Tata Steel as well, which is all set to report its Q1 numbers, where revenue is expected to dip and the margins are expected to expand. Let's go across to Ashesha to get us what else is the street penciling in. Ashesha.
Well, yes, we are expecting mixed set of numbers for steel major Tata Steel this time around. Revenue is expected to see a downtick of about 10% on a sequential basis, and that is because of the 15% drop in volumes that the company has already reported for the first quarter of FY26. But remember, steel prices rose in the first quarter because of the price hikes that steel mills had undertaken in the months of April and May, and that is likely to result in an uptick in realizations in the quarter gone by. Coking coal costs were also on the lower side. EBITDA per ton is likely to inch higher. Now, as far as numbers are concerned, consolidated revenue could come in at about 50,460 odd crores, which, as I mentioned, will be a downtick of 10% QOQ. Margins, meanwhile, could come in at 13.5% versus 11.7% that the company had reported in the previous quarter. India operations, that one is expected to report strong set of numbers where realizations could rise 4% on account of surge in steel prices, and EBITDA per ton could come in at 14,500 rupees per ton, an uptick of a solid 15% on a sequential basis. Now, as far as European operations are concerned, we are expecting a surprise over there as well. Remember, it reported a loss of $37 per ton in the fourth quarter of FY25, and we are expecting European operations to break even this quarter, so that will be a big positive. Netherlands operations profitability is likely to expand on a sequential basis. Management commentary in terms of steel prices, coking coal price trend, and capex plans for its India operations will be crucial. But all in all, we are expecting revenue dip on account of fall in volumes. Spreads are expected to expand for India operations, and Europe is expected to break even this time.
Okay, so a mixed expectation from Tata Steel, and as we clearly see, the realizations could see an up move of around 4% on a quarter-on-quarter basis, led by the improvements in the steel prices. Tata Steel completely flat in trade, Nagraj, at present 161, 162 before the numbers. It's cautious at present. What does the technical say?
Technically suggesting a broad range movement for the Tata Steel over the last couple of months. What we have seen at the lower level is 155, 156 is going to be the support, and at the higher level, 165, 68 is going to be the hurdle. This stock is, I'm not expecting a bigger decline from chartically as point of this time. Any slide from here on could find a strong support around 156 levels.
All right, so that's the take coming in on Tata Steel. But Nagraj, with this, we'll let you go. Thank you so much for taking the time out and speaking with us. Well, with this, viewers, let's also tell you that ET Now, Leaders of Tomorrow, is back with season 13. And yes, this is India's longest running television show dedicated to MSMEs. And this season, Leaders of Tomorrow is spotlighting the spirit of Indian entrepreneurs through the theme Agility, Ambition, Ascent. Witness how bold visionaries are adapting to the change and reaching new heights. Don't miss Leaders of Tomorrow Season 13 starting 4th of August, Monday to Friday, 7:30 p.m. only on ET Now.
Well, earnings season is up and running, and it's going to be an earnings heavy day on the Lal Street. Coal India is one of the candidates where lower dispatches could offset benefits from higher e-auction premiums and realizations. Ashesha joins in to tell us what to expect. Ashesha, what are the expectations from Coal India?
Well, yes, we are expecting weak set of numbers from Coal India this time around. Offtake was on the lower side on a year-on-year basis, and that is likely to weigh on Coal India's numbers. But remember, e-auction premiums and e-auction realizations are likely to be higher, and that will partially offset the impact of lower in the quarter gone by. As far as numbers are concerned, consolidated revenue could come in at about 34,800 crores, which will be a decline of about 4% on a year-on-year basis, and margins could come in at 30% versus 39% that the company had reported in the same time last year. Now, as far as numbers are concerned, as I said, volumes are on the lower side. Company has reported dispatches at about 190 million tons, which is a decline of about 4.5% on year-on-year basis. So that is likely to weigh heavy on numbers. But e-auction realizations and premiums are likely to be higher. So we expect e-auction realizations to inch higher by as much as 8 to 10% on a year-on-year basis, and premiums could likely inch higher by about 4 to 5 odd percent. All eyes will be on management commentary with respect to volume outlook for FY26 and 27. Management commentary on pricing trends, e-auction premium and realization will also be keenly awaited. But all in all, we are expecting a weak set, and lower volume growth is likely to weigh heavy on numbers this time.
All right, thanks Sachisha for all those details, but indeed a lot of earnings that are expected, and even HUL is expected to report its numbers. But what is the street really penciling in? Let's go across to Snehi to find out all of that.
Well, it's a muted quarter is what we're expecting from HUL this time around. On a standalone year-on-year basis, revenue is expected to come in at 15,962 crores, which is an uptick of 4% on a year-on-year basis. But EBITDA and PAT are seen absolutely flat year-on-year. EBITDA seen at 3,618 crores, which is up just 0.3%. Net profit is seen at 2,583 crores, which is up 1.8% year-on-year. We're expecting to see some pressure on margins at 22.6% compared to 23.5% on a year-on-year basis. And if you take a look at the overall expectations in terms of the underlying volume growth, that is expected to be at 3% this time around, slightly better than what we've seen in the previous quarter. The value growth is expected to be lower than volume growth due to the price hikes that the company has taken, and margins are expected to be slightly under pressure on the back of the end cost, the raw material inflation cost that they've passed to the end user, and also a 10 bips hike in the royalty that they pay to their global parent Unilever. A low single-digit underlying pricing growth, anywhere between 0.5% to 1%, is what we're expecting to see. Some price growth in soaps and carry forward price increase in tea and coffee is expected largely this time around. Home care can expect it to grow at 2.5% on a year-on-year basis. Beauty and personal care up 5%. Foods expected to grow roughly 3% with price hikes in tea and coffee. In terms of factors to watch out for when the numbers do come out, watch out for any growth outlook, margin guidance revision, if at all, because they had cut their guidance slightly in the previous quarter. So let's see if that is maintained or further reduced. Inflation and pricing outlook for soaps and tea, rural and urban demand scenario, and of course the impact of minimalist acquisition on the other income segment of the P&L. So these are going to be important to watch out for.
Absolutely, HUL will keep an eye on that. But New India Assurance, let's pull up that stock, and a whopping 18% upsurge on the back of 19% upsurge as we speak, 206, 207 levels. Good set of numbers, Sharon, and that's what the stock is also reflecting at present at 206. What is your view for the ones who already have their existing positions in the New India Assurance?
So Mansi, looking at the volume, I think this is the highest ever volumes since the stock has been listed. And again, it's up 19%, gaining market share, a very big positive, a very big thumbs up from the street. So I think if anyone has the position, please hold on to it. Looking at the volumes and the accumulation today, I think there's a long way to go. Stock has a small resistance around 210 odd levels. If it breaks that, you can easily see levels of 250 coming in the next 2 or 3 quarters. Again, very positive on the charts, trading above all its moving averages. So anyone has, hold on to it for 250 odd levels.
All right, so 250 could likely be on the cards for New India Assurance. But Siddharth, the other stock that is doing very well, and it also had its investor meet, is actually D-Mart, where the company is actually highlighting the fact that they are willing to double down on their investments with respect to new store expansions. While of course there has been some concerns within the investor community that how this new QSR can actually eat away the business for D-Mart, but the company stands tall and saying that they do not feel any threat to that. Look at the move, 6.5% jump. What does it really mean for D-Mart, Siddharth, and any specific target price on the same?
Definitely. I think if you look at D-Mart, they have been struggling in the past couple of quarters, largely on back of the slower growth. The biggest impact has been the high growth in the quick commerce business, which is impacting D-Mart's value offering that they are having. I think what the management sounded pretty confident in terms of the growth, especially on the physical stores, and that is what the market is liking for now. Overall, I think the valuations have the stock having consolidated for last 3 years. The valuations have now come off from the highs, and if we see this kind of growth that the management is talking about, if that can revive the growth, there will definitely be a lot of interest, because this is a space where there is a lot of interest. The management quality is very good. There has been issues recently after the management change in the CEO. So I think a lot of things now putting back into perspective. We definitely like the stock, but I think a lot needs to be delivered than just talked about. So right now we have a buy rating with a target price of 4,500. Not much upside, but definitely we'll review our numbers post taking what the management has said into consideration, and we'll review our numbers for sure.
So that's the view coming on Avenue Supermart, and let's meet takeaways as you see on your screen, and a view coming in as well. A quick view, Sharon, in the chemical fertilizer space as well. The chemical stocks are not doing that great today, but yesterday was the day for the chemical space. But the fertilizer stocks, be it FACT, Chambal Fertilizer, all of it is doing good rounds. Any view? We just have 3 minutes for the markets to close.
So Mansi, I think in the morning they were doing quite well, but since morning they have seen somewhat of selling. But if you see the charts of Deepak Fertilizer, the stock is almost near to its all-time high. Looking good on the charts. If anyone has a position, I would suggest to stick to it. And I think its high is around 70 odd levels. And looking at the chart, I think if the stock reverses, it can easily test its recent swing high. So Deepak Fertilizer is one stock that should be on your radar for the next 3-4 trading sessions.
All right, so within the fertilizer pack, let's watch out for that. But with this, Sharan as well as Siddharth, thank you so much for taking the time out and speaking with us. So indeed, that's been an interesting day for the markets. Well, of course, it has been consolidating, but a lot of movers in trade today, be it DMart, be it L&T, and select chemical and fertilizer counters. Add to that list to select IT names. But with this, let's hand over to Ashesha to help us understand that how did the market pan out today.
Well, yes, a whole host of individual gainers. We'll talk about that in just a bit. But before that, Nifty, that one is ending nearly 25 points higher for the day. 24,846 is where we are currently trading. Nifty Bank also managing to hold on to some amount of gains by the end. But look at that. That one is now down nearly 95 points as we speak. 56,126. And perhaps some last minute volatility because of the expiry that we are seeing today. Nifty Mid and Small Cap Index should also come up for you on your screens. We did see some amount of profit booking over here. Nifty Mid Cap Index ending 60 points lower, and Small Cap Index was also under pressure today. In terms of individual stocks, we had Tata Motors. That one was down 3.5% with the back of that acquisition news that came in, which could perhaps be margin dilutive, and it's a big deal if at all it comes through. Tata Motors ending the day 3.5% lower. We have Hero MotoCorp, Eternal Power Grid. These were also some of the other losers from the Nifty 50 pack. On the losing side though, on the gaining side rather, we had L&T. That one is up 4.5% after it reported strong set of numbers. Management commentary was positive. Brokerages too have given a thumbs up. 4.6% higher for that one. NTPC, Sun Pharma and Maruti Suzuki. These were also some of the other gainers from the Nifty 50 pack. In terms of individual sectors, we had real estate stocks after soaring high yesterday. This sector was underperforming in trade. We had Brigade Enterprises. That one was down nearly 2.5% in trade today. Nifty Realty Index, it shaved off nearly 1%. Brigade Enterprises down 2%. DLF and Godrej Properties, these were also some of the other laggards from the Nifty Real Estate Index. We had IT sector, which was gaining in trade. But apart from that, let's talk about New India Assurance. Very strong set of numbers that the company reported. In fact, New India Assurance, that stock was gaining nearly 15% the last time I checked, and that should also come up for you on your screen. 17% higher for this counter. And we also had the likes of Varun Beverages that were in focus on the back of brokerage reports. So yes, a whole host of individual buzzers. But on the index level, Nifty is ending rather flat near that 24,846 mark. Nifty Bank though is ending under pressure. Quite a bit of divergence that we are seeing. But that's all the time we have in this edition of the show. But your trades will come up next. Don't go anywhere.